And just to contextualize how crazy that is, before this ETF launched, the fastest growing ETF of all time in its first year was the Qs, NASDAQ 100 Qs, invested in NASDAQ technology stocks. And it brought in $5 billion in its first year. I'm saying that these ETFs could do 10x that.
Hougan begins by discussing a groundbreaking study that examines the impact of incorporating Bitcoin into traditional investment portfolios. Contrary to expectations, Bitcoin not only enhances returns, but also does so without significantly increasing portfolio volatility. This unique characteristic makes Bitcoin an attractive asset for institutional investors seeking to optimize their investment strategies. Hougan emphasizes that Bitcoin's ability to boost returns while maintaining stable volatility is akin to magic for institutional investors, positioning it as a sought-after asset in diversified portfolios drawing on his expertise. Hougan provides compelling projections for the inflow of funds into Bitcoin ETFs, highlighting the unprecedented growth potential in the coming years, with estimates suggesting a potential influx of $50 billion into Bitcoin ETFs. Hougan underscores the transformative impact of these investment vehicles on the cryptocurrency market. He attributes this growth to the activation of various market faucets and expresses optimism regarding Bitcoin's price trajectory leading up to the halving event. Furthermore, he emphasizes the role of institutional demand in driving Bitcoin's ascent, foreseeing sustained price appreciation as long as ETH demand remains robust.
The really interesting thing from that study, which looked at what happens if you add 1%, 3%, and 5% Bitcoin to a traditional stock and bond portfolio, looking at all the different time periods that have existed. It never surprises people that Bitcoin boosted returns because it's the best performing asset of all time. Mm-hmm. Of course, if you sprinkle it in, it will boost returns. What that study showed is that it boosted returns without significantly boosting your volatility. And that's where people's brains break, because Bitcoin, of course, is very volatile, bounces around a lot, but it does a different thing than stocks and bonds. So you add it to a portfolio, it boosts your returns, but your volatility stays flat. And that's like magic to institutional investors, right? That is the holy grail that they're looking for. And at least historically, that's what Bitcoin has delivered. And then I spend a lot of time talking to investors about why I think that will continue into the future. Look, I think we could get to $50 billion in inflows this year, which is outrageous. To put that in context,
12 or so?
Now we're about 12, 13.
Okay.
Yeah. And just to contextualize how crazy that is, before this ETF launched, the fastest growing ETF of all time in its first year was the Qs, NASDAQ 100 Qs, invested in NASDAQ technology stocks. And it brought in $5 billion in its first year. I'm saying that these ETFs could do 10x that. And the reason for that is what we mentioned earlier, which is not all these faucets are even on.
Right.
And because I think they'll turn on, and because I'm also optimistic of the price going into the halving, yeah, I think it could be $50 billion, which is incredible. And I don't think we'll stop there. I think year two could be even bigger. Look, if you zoom out, wealth managers globally control $100 trillion of wealth. What's 1% of $100 trillion? It's $1 trillion. We've gotten $10 billion in. That's 1% of $1 trillion. It's great. We should be excited, but there are miles to go. So yeah, the answer, I think we could get to $50 billion this year, which would be incredible, but I don't think it's impossible. If you think about the Bitcoin market holistically, you have new Bitcoin being created by miners that has to be sold. And right now, as you mentioned, the ETFs are buying up 2x, 3x, 4x, 5x, 10x that. So the only thing that can happen is the price has to go up until long-term holders agree to sell. Now, it shouldn't be surprising to us that we've hit resistance at the all-time high. Think about from a behavioral perspective. If you've been a long-term investor, you're probably holding out for all-time highs and then you're willing to sell. Mm-hmm. It wouldn't surprise me similarly from a behavioral perspective if we hit a wall at 100 grand. You're a long-term investor, you might have said, I'll sell some Bitcoin when it gets to $100,000. We're all humans. Like, those numbers do have a factor. Mm-hmm. Above that, I don't know where people sell. But yeah, absolutely. The price will rise until people are willing to sell. And as long as this ETF demand is right, and I could be wrong, the ETF demand could dry up. It could reverse. I actually do expect at some point there will be days where there are outflows from these ETFs. That's normal. That's what happens. But if we see consistent ETF demand and the halving, will happen, yeah, I think you're going to see price ratchet up until you can shake Bitcoin out of the hodler's hands. I think validation is a very good term. I mean, you back up 2 years ago, and if you were outside the crypto industry, you would have Jamie Dimon saying it's a pet rock, and you would have Sam Bankman-Fried saying it's going to 1 million. And that's an unfair fight if you're a traditional finance person, rightfully so. Today, you still have Jamie Dimon, but on the other side, the CEO of JP Morgan, on the other side, you have Larry Fink, CEO of BlackRock, the largest asset manager in the world. And he's saying this is an important part of the future. It could be the most valuable currency of all time. It's a store of value. And that provides a balance to someone who hasn't approached crypto. It would be easy to dismiss it if the only person you trust was anti-crypto. But now in the TradFi world, you have this equal representation of people who are skeptical of the asset and people who are strongly bullish on the asset. And that means people have to make up their own minds, and some of them are breaking towards Bitcoin. It's pretty fun. I mean, we think of ourselves as standing on the shoulders of giants. Some of those giants are those Bitcoin core devs. And, they're funded by donations. That's just the way this thing works. And so we were really pleased to be able to do that. And I know it means it helps some people decide which ETF to allocate to. We're also pleased to be the first ETF to disclose our Bitcoin address. So you don't have to rely on KPMG, which is our auditor, a great auditor. But you don't have to rely on that. You can check yourselves. You can go to our Bitcoin addresses and see exactly the Bitcoin we hold. We care about the crypto ecosystem, and we're trying to express that through the products that we launch.
Hougan offers valuable insights into the regulatory landscape surrounding cryptocurrency ETFs, particularly focusing on the prospects for Ethereum ETFs. He highlights the strong legal argument in favor of Ethereum ETFs, citing the correlation between Ethereum futures and the underlying asset. While acknowledging regulatory uncertainties, particularly regarding approval timelines, Hougan remains optimistic about the eventual launch of Ethereum ETFs. He predicts that market conditions may favor a later launch date, allowing for a smoother integration into the existing ETH landscape.
We've entered the ETF era of crypto. So it is truly a matter of when and not if on something particularly like Ethereum. I think the legal argument in support of an Ethereum ETF is very strong. There are already Ethereum futures ETFs, and Ethereum futures are highly correlated with Ethereum itself. That's the same argument that won the Bitcoin battle and got us Bitcoin ETFs. Eventually, I think it's going to win the Ethereum battle and get us Ethereum ETFs. A big question in the market is, will it occur in May? May is the date the SEC has to respond to the first Bitcoin ETF application. I think Bloomberg puts the odds of that at 25% for approval. That strikes me as about right. It seems unlikely because you're not seeing the SEC and issuers go back and forth with filing updates. It's just not pattern matching to what you see prior to approval. But I wouldn't take a delay there as anything but that. I think that's important to keep in mind. Yeah. It's also important to keep in mind that 25% is 1 in 4, right? NC State just plowed its way into the Final Four.
Damn right.
They had a much lower than a 1 in 4 chance at the start of this tournament, and look, they're there now. So 1 in 4 doesn't mean it's not going to happen.
Totally.
It just means, maybe it's not likely. But I think that would be a huge surprise. I have said, and I'll stand by this, that I think Ethereum ETFs will gather more assets if they launch later, if they launch in December, than if they launch in May. I think the market I deal with is still digesting Bitcoin ETFs. We still haven't gotten those 2 approvals. They're still figuring out this space. I think, let them cook, give them a little bit of time.
Yeah.
And then I think if we get it at the end of the year, that will be great. But either way is a win. And I think it's going to happen. I'll add, other altcoins will take longer because there aren't regulated futures markets. Eventually we'll get there, but we'll need new legislation or new futures markets to launch. We'll get there, but those are longer out. But Bitcoin and ETH, They should exist in ETF format, and I think that they will.
Yeah.
You have the experience with the Ethereum futures ETFs, which launched and didn't gather much in the way of assets. On the flip side, you have the fact that traditional finance professionals sort of like Ethereum better than Bitcoin sometimes because they like its real world use cases and its cash flow. And I have a hard time weighing those things, but it's going to be a fraction of the flows we've seen into Bitcoin. It's not as big an asset. Could they get $1 billion in the first month? Probably. Will they get 10? Probably not. We'll see. And I'll add one more nuance that maybe I haven't seen discussed in the media, which is there's a reasonable chance that Ethereum ETFs will launch without staking, right? They'll launch with no staking. And so it could be that they have a halo effect. In other words, the launch of an ETF makes Ethereum an investable asset by professional investors, but some of those investors may choose to take a direct approach so that they can stake their ETH. And that wouldn't show up in the ETF flows, but it would still be sort of driven by the launch of ETFs by creating this halo effect around the space. So I think it'll be very positive for price. I think it'll clear up some regulatory uncertainty if it happens. I think it will attract flows. And as you mentioned, it's a much smaller asset. So even if it's not $10 billion, I think it'll still be a big deal. I would just encourage people to think in multiple years. I'd add one more fun fact from my ETF background. The gold ETF, people got very excited in year 1, but actually inflows were higher in year 2, and then higher in year 3, and then higher in year 4, and all the way up to year 7. 7 years of ascending inflows. I don't know that we'll have the same thing in Bitcoin. It could be shorter, but it's going to compound over time. Year 2 will be bigger than year 1. Year 3 will probably be bigger than year 2 is my gut on this.
With a keen eye for market dynamics, Hougan offers expert commentary on the evolving perception of cryptocurrencies within the traditional finance industry. He contrasts the skepticism of figures like Jamie Dimon with the bullish outlook of industry leaders like Larry Fink, underscoring the growing acceptance of digital assets among mainstream investors. Hougan emphasizes the importance of a balanced approach to investment decision-making, urging investors to consider the diverse viewpoints shaping the cryptocurrency landscape. Please like and subscribe my channel.